Hello, 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 community. Happy Thursday to all of you. Happy February 29th. This is one of those years where February has 29 days. It's always 4 years consecutively. So, once again, happy Thursday to all of you. Welcome to another community live stream today. I hope your week has been going well so far. You and yours are doing great. We're always looking forward to these community events as they give us the opportunity to discuss various topics that involve our industry, of course, the crypto industry, about the blockchain technology, about what money is, the financial systems. And of course, we always like to tie all these topics back to our ecosystem and build bridges and then go from there and ensure that we leave these sessions highly informed, highly educated, and highly inspired. So with that said, again, welcome to all of you that were able to make it today on today's live stream. Always very thrilled, always looking forward to these sessions today. We always like to keep them crisp, on point, because those that will want to rewatch this, that are not with us live today, they'll be able to have a great session put together. With that said, of course, you saw today's topic. It's all about the role of capital in the crypto industry. These are topics that are often not touched, not highlighted, not broken down, and not really put in the forefront. The reason being is that having the experience of being in the traditional financial market, having that background just allows us to look at things differently. And in the crypto space, I believe with time, especially now that the regulations are about to enter the space, with now the ETFs in place, with Wall Street in place, the way humanity, the way the population will start looking at the crypto industry will shift. And we are experiencing that shift already. And this is what this topic is all about today in this session. And I'm looking forward to break this down and go through this journey with you today. I'm really excited about that. And as always, before we start, of course, I'd like to go through the comments, see who is here, acknowledge you, welcome you to the session, and appreciate you all for showing up. As you know, today is the last day of the month. Starting tomorrow, we will be having our first day of the March campaign. March will be a very exciting month. It will be loaded with a lot of excitement and activities in our community, but we'll discuss that at the end of the video. So let me come and greet you, acknowledge you, welcome you to today's stream, and then we'll kickstart right away with today's topic, as we have quite a bit to cover today. So I see here Queen Val is here. Hello, family. Hello, Mr. Steve. What a way to end the month of February. BULLRUN Killer Whale Survivor Bullish 2024. Welcome, Queen Val. Always a pleasure having you here with us. And I see, excellent. This is great. Thank you for this, Queen Val. These are the websites, the Telegram groups. For those that are new and are not part of our community yet, you have the handles here, the website is here, the Telegram links are here. For BULLRUN, this is for Killer Whale, the website and the Telegram link. And we also have for the Survivor, we have the website and the Telegram links here as well. And even as you see on the screen, these are our 3 community tokens, with BULLRUN being the main token. And then we have Survivor and Killer Whale as well. So thank you very much, Queen Val, for this. We have my brother Demo here as well. It's time for another great educational session once again. I hope you and yours are doing well. Let's go. So welcome again also, my brother Demo. We are all well. Looking forward to this session. I hope you and yours as well are doing well as well. None other than the great brother Theo. Greetings, my great brother Steve. Greetings, dearest Queen Mawino, and greetings to the entire BULLRUN family attending today. I'm looking quite forward to yet another epic session with you all. So are we. Always a pleasure having you in the community, my great brother Theo. Thank you for your presence. Thank you for your involvement, your positive energy. It means a lot to the community. Great brother Tembi is here as well, getting ready for another life-changing session. Let's go, family. Always a pleasure seeing you around, my great brother Tembi. We have Mr. Anas here as well. Welcome, Mr. Anas. Welcome to the community. Let's go, he says. We have Queen Sally here as well. Welcome, Queen Sally. Greetings, Mr. Steve, Mama Wino, and the BULLRUN family. Excited about today's session, especially with the warm-up in the markets. Absolutely. The markets are just doing what they need to do during a bull run session. And it's really exciting. It's encouraging. And we're definitely looking forward to how the year has kicked off. And the first 2 months have been just amazing. This just leads to show what type of a bull run cycle we are about to experience. And this is very exciting. So Queen Martha is here as well. Welcome, Queen Martha. Good evening, BULLRUN family. Never stop learning. I'm excited and looking forward to this session. Let's go. So are we, Queen Martha. It's a pleasure having you here as well. Thank you for your presence, your commitment. Queen Goliba is here as well. Welcome, Queen Goliba. Hello, bull runners. Let's collect information and grow. Absolutely. That's the whole purpose of today, Queen Goliba. Well said. Very well said, Queen Goliba. We have Queen Margaret here as well. Hello, community. Hello, my brother Steve. Looking forward for this amazing session. Also looking forward to this session with you all, community. Very excited about today. And we have Queen Kosi is here as well. Greetings, family. Looking forward to an amazing and enlightening session. Thank you, brother Steve, Mama Wino, and all the kings and queens. It's a pleasure. Always a pleasure having you here, Queen Kosi with us. Thank you very much for your attendance. Queen Patricia is here as well. Good evening, family. We are here again to learn from our Mr. Steve. I am happy to belong to such an educative and empowering community. Is the recession going to affect BULLRUN? This is an excellent question, Queen Patricia, and we will cover all this in today's session. So after the greeting, we'll kickstart it right away. And amazing question, and it will be answered, Queen Patricia. We have Queen Nancy here with us as well. Hello, Queen Nancy. Happy Leap Day, Steve and BRL community. Thank you for gracing us with your knowledge and teachings. Let's go, BRL family. Thank you as well for gracing us with your presence and your positive energy. Always a pleasure seeing you in the community, Queen Nancy. Queen Nosy. Good evening, kings and queens. Yes, looking forward for a very powerful presentation. Thank you very much for your presence as well. It's an honor having you in the community, and thank you for your time. Queen Lathi is here as well. It's a pleasure again to sit down and listen to our great teacher, Steve. Thank you again and again. We thank you also, Queen Lathi, for your presence, for your consistency, for your positive energy. You are very much appreciated. None other than my brother Abdullah Ladan himself. Always a pleasure seeing you around in the community. You are very much appreciated. Warm greetings to you all. Warm greetings back to you also, my brother. With that said, community, again, welcome to today's session. Let's get right into it because there's a lot to cover today. And we'll also touch on some other things at the end, but I really want us to kickstart with today's session so we can get it rolling, and then I'll announce some things, or we'll touch on some things at the end as we are going through your questions. And of course, today, day 45. So today is a very, very special day, day 45 in our community tweet challenge. So we are halfway there already, community. This is a great accomplishment. We'll get to more of this at the end. Let's kickstart today's session and let's get this going. So like we say, today's topic is the role of capital in the crypto industry. This is a topic that is very important, not just for us as a community, but it's actually important as an industry. And you'll soon realize why. It affects all of us. And Wall Street has been playing their cards right. And they are right now at the driver's seat. And it didn't take them more than a month. So we are going to dissect this topic today. We're going to look at it in details. And I hope this session will enlighten us. And it's a call for the crypto community to really pay attention. And we are at a cutting edge time right now where this blockchain technology gives us access, the tools we need to shape things how we want it to. We want them to get shaped, and we have to do things that right from the very beginning, because if not, we might lose course. And we're going to highlight today that we need to pay attention to this capital. So this topic today is very important, community, and I'm glad that we can cover it all together today. So let's start this. First of all, like was already mentioned, let's quickly jump and look at the market. It's amazing to see that last bull run, the total market cap was at 3 trillion. Currently, we're at 2.3 trillion already. And we're just at the beginning of the year. So we haven't had the Bitcoin halving yet, the interest rates cuts yet, debt ceiling raised, money printer is not on yet, the elections are still ahead of us. There are a lot of things that are still ahead of us that will still serve as catalysts. So needless to say, last bull run's all-time high is completely going to be demolished. Currently, Bitcoin actually surged all the way to 64, close to 65,000 earlier this week. It died. Of course, some took profits. It came down a bit all the way to 60, but it held strong and is now between 60 and 62 right now, and 63. Ethereum has been holding on strong as well, as you saw. So the big projects have been doing the big cryptocurrencies have been doing extremely well. So that's all I want to touch on. And another interesting part right now is we've never seen the greed so high. The greed index is extremely high right now. As we see, it's at 86 right now. So it's extreme greed. And these directly reflect the market. It's this market is always driven by emotions. So as you saw, when it wasn't as greedy, it was more red and the markets were flat or actually decreasing. But now with greed, you see green, literally. You see people are hyped, the message is going out there, a lot of positive vibes, a lot of positive information out there. So a lot of catalysts that are still ahead of us. So this causes a lot of greed, a lot of FOMO, fear of missing out, and people are just jumping in right now. Crypto is starting to be the topic on the table at workplaces, among friends and families. So all this cause, of course, a lot of hype for crypto, and this is good for us. This is something great. Now, let's get into the topic today now. Keep in mind the topic is the role of capital in the crypto industry and why is it so important. Now, let's get into this. Let's start with what is capital. Let's understand in a nutshell, without boring you with too many vocabularies, we'll just in a nutshell summarize what capital actually is. The point of this is just to highlight the importance of capital. So capital refers to a variety of financial and non-financial assets that businesses and individuals use to produce goods and services. The term has a broad definition and can refer to tangible assets like buildings, machineries, and equipment, or as intangible assets like intellectual property and goodwill. So also, if we look at this, of course, we want to look at it in the context of economics. That's the context we want to look at it. So in the context of economics, capital is often defined as the resources and inputs. Oh, okay. Community, let me share my screen. Of course, you can't see the screen. Let me share my screen. All right. So here we are. So what I was talking about earlier about the fear and greed index, pardon me about that. I didn't know that you wouldn't see what I was seeing. So like I was saying, the market, 2.3 almost trillion, and at all-time high was at 3 trillion. And here you see the greed index is at 86%. So this is extremely high, and it reflects on the market. So what I was reading here, I wanted us to understand what capital actually is. And this is very important for us to understand. And because you couldn't see my screen, let me briefly go through it again. Like capital refers to a variety of financial and non-financial assets that businesses and individuals use to produce goods and services. And that this is a broad definition, of course. And capital can be tangible, such as buildings, machineries, and equipment, or intangible, intellectual property and goodwill. And also, what I want us to look at is the economic context. That means that capital is often defined as a resource and inputs used in the production process to create goods and services. Now, what's really important here, and I want us to highlight this now, why is capital important? Now, this is very important. Capital is important for various reasons. The first one is it provides a source of funding. So capital provides businesses and individuals with the resources they need to fund their operations, invest in growth, expansion, and pursue new opportunities. So capital provides a source of funding. Also, capital drives economic growth. So capital is a critical factor of production and is necessary for businesses to produce goods and services, create jobs, and drive economic growth. Okay, what else? Capital creates competitive advantage. Capital can take many different forms, including intellectual capital, which provides businesses with a competitive advantage by allowing them to produce new and innovative products. Finally, capital supports the financial system. Capital is also a key component of the financial system, providing investors with the resources they need to make informed decisions and support the growth of the economy. Now, let's summarize this. Capital is an important resource that plays a critical role in the functions of businesses and the economy. So capital provides funding, drives economic growth, creates competitive advantage, and supports the financial system, making it a crucial component in our modern world. Let's keep this in mind. Capital, the bottom line, the takeaway here is it's a crucial component in our modern world. Now combine this with the blockchain technology, with the cutting edge cryptocurrencies that we have right now. This puts us at a situation, at a crossroad where we surely need to align ourselves, understand the opportunities that present themselves in this space, and take full advantage of them by not only understanding the challenges, but highlighting the opportunities, then having solutions for them. And this is where we're heading right now. But at first, we are zooming out and looking at what capital actually is, the importance of it, the significance of it. So now that we understand capital and understand how it's important for economic growth, create competitive advantage, supports the financial system, and making crucial, and that it's a crucial component for us in this modern world. Let's continue right now. I'm sure this chart by now you're very familiar with. Let's get back to the reality. Our current reality is that we have a fiat monetary system that is based not only on debt, but on inflation and oversupply. This is our current situation that we're in right now. And as we see here on this beautiful chart, the inflation has eroded the purchasing power over time. And this is due to inflation, high inflation, and also the oversupply of money, because in order to positively trigger an economy, there's always a debt is involved. So you have to raise the debt ceiling. And this is what we're about to experience, actually. And this will trigger the markets even more. The debt ceiling will be raised, interest rates will be cut, and then the money printer will be turned on. And through central banks, money will be flooded into the markets. And of course, the crypto industry, which is the most lucrative asset class in the space, will benefit the most from from this influx of liquidity and of money into the markets. So this chart just shows us that it's hard to maintain capital with such a monetary system, because we are having a fiat system that is based on debt, not liquidity or capital, but it's based on debt. And we are working with fiat currencies that are actually losing purchasing power, are overinflated due to high interest rate and oversupply due to overprinting of money. So this is our current situation that we are in right now. So we see that on one hand, capital is key. We need capital. It helps us to run economies, run businesses, expand, and growth for economic growth and all of that. It plays it's a crucial component in our modern system. And this is our current monetary system. So we have two polar opposites right now that we have to deal with. On one hand, we need capital because it's key. On the other hand, our current financial system is in a mess right now. So with that said, let's look at this. Currently, we understand that these ETFs have been on the news now for over 6 weeks, 7 weeks now. And people have been asking themselves, well, does this ETF, do they really defeat the purpose of investing directly into Bitcoin? And why, in the first place, do these ETFs exist? Why are they there? And let's find this out together. And again, we'll just touch the highlights. Okay, let's only look at the important things. So the takeaway out of this text is that right now the resistance to the Bitcoin ETFs are being compared to the early days of the internet, when monetizing websites were considered taboo. So the author here is comparing the current situation we're in right now with back in the early days of the internet, where a lot of people were hesitant into getting into this new technology, specifically Bitcoin. But now with the ETFs coming in, it opens floodgates. It opens the doors for many investors, many people to be able to get in and join and participate in this economy. Now, again, there are two people from two different sides. So those who have the utopian vision, or they're better known as Bitcoin maximalists, those who really just think of Bitcoin as the only cryptocurrency you need in the space. But most of other communities also think like this, however, is that we are all for being self-custody. We should all have self-custody, be our own banks, and also decentralized. So these are two things right now that need a lot of education, because many individuals are not capable of doing that, or are not willing to take the time to learn how to do this. If you don't have the time or don't want to learn how to self-custody, be your own bank, hold your own wallet, so to speak, and use decentralized applications such as Uniswap, you will tend towards going to ETFs, because these are challenges that an average user has to manage if they want to get into cryptocurrencies securely. And many or majority of people don't have the time or don't have the patience to learn self-custody and how to use these DeFi or decentralized applications. So another thing that we take away here is that ETFs, they don't align perfectly with the vision of Bitcoin, okay? However, they serve a crucial role in making cryptocurrencies available to the broader audience, and particularly through tax-efficient vehicles such as saving accounts, okay? So the argument here is that, okay, majority of people don't want to write down their 12 seed phrases, or even 24 if you have a cold wallet, store them, learn how to open your own wallet securely, use DeFi, decentralized exchanges, and so on and so forth. It's a steep learning curve. And it's being compared to the early days of the internet, where a lot of people didn't have the patience or wanted to take the time to learn or be involved with this new technology. So ETFs open a door to ease them into this industry, and serves as a two-edged sword. For one, it's good because it makes cryptocurrencies accessible to the broader audience. But then again, it defeats the whole purpose of self-custody and decentralization. So it's a two-edged sword that we're fighting with right now. But more importantly, final takeaway I want us to take away from this is the significance of ETFs is in driving liquidity. The bottom line here is that ETFs are the #1 liquidity drivers, not just now currently in the crypto space with Bitcoin ETFs, but even in the traditional market. ETFs are extremely liquid vehicles. And whenever there is liquidity, you will also find volume. And we're about to look at this closer. So the bottom line is that ETFs are significant forces in driving liquidity in the crypto space, because liquidity is lacking in the crypto space. It is lacking. There are no cryptocurrencies ecosystems out there that are heavily focusing on driving liquidity in the crypto space. And this is our downfall as an industry. This is our flaw as an industry. And this is why Bitcoin has been able to be taken over easily by Wall Street. Let's go further. This is a very interesting chart that we need to look at here. As of now, more than 10% of Bitcoin supply is owned by publicly traded companies, private companies, ETFs, and even nations. 10% already of the total supply. Now, out of this 10%, roughly half of it, 4.5, and this is very important to understand, almost half of it is owned strictly by ETFs, by 10 entities. That's it. So what does this mean? Let's bring more clarity to this. You see the total value right now of these ETFs combined is close to 59 billion right now. And keep in mind, this is mainly within 7 weeks right now, just very early stages of the year, and they already have half of the supply of all public, private companies and countries. ETFs alone hold half of it. And this is just at the beginning. Imagine at the end of the year how much they'll be holding. And this is not market cap. This is liquidity. This is how much liquidity is in ETFs. Close to 59 billion in Bitcoin alone. Now, if we look at Bitcoin, how much is in liquidity? 1 billion right now. So if you're a wealthy individual, if you're an institution, wouldn't you rather want to go with a trusted institution such as BlackRock or Fidelity, ARK Invest? And if you see that they have close to 59 billion in liquidity versus 1 billion in liquidity, it's not a surprise where institutions and whales are going to purchase their Bitcoin. They're going to get ETFs because ETFs are extremely liquid, like we see here. Their liquidity is at 59 billion almost, and they're dealing with trusted institutions. So the takeaway here is that ETFs hold almost half of the total supply of public, private institutions, countries, and they hold half of that within 2 months, in less than 2 months. So this number is obviously going to increase even further. This is incredible. And they're extremely liquid. This is why more and more individuals and institutions are going to go with ETFs instead of coming to centralized institutions where there's only 1 billion basically in liquidity. So this is something that we need to understand. Now, another thing that we need to ask ourselves, um, we said that where liquidity is volume, right? And just to prove the point, 59 billion in volume, in liquidity, right? And look at what happens if you have liquidity, you get volume. So spot Bitcoin ETF volume shatters records. Within 24 hours yesterday, there was a 7.7 billion in trading volume. Now these ETFs are just 7 weeks old and they already have 7.7 billion in trading volume. I know it doesn't make sense right now, so let's look at comparisons. Keep in mind 7.7 billion in one day, just 10 institutions alone, mainly BlackRock, of course. So before we look at the examples, let's continue reading here. United States spot Bitcoin ETFs exchange funds have set a new record for daily trading volumes, beating the previously tally by over 1.5 times. So the 10 ETFs saw 7.7 billion in volume. That was yesterday, February 28th. The previous record was at 4.6. This was on the first day of trading, on launch day. And of course, like I said, BlackRock alone took 43.5%, close to 44%, just went to BlackRock alone. So let's look at this number, 7.7 billion in trading volume. What does this mean? So if we look at the top 5 cryptocurrencies right now, and let's focus on trading volume. They have 7.7 billion in trading volume. So with that type of trading volume, it will put them only behind Bitcoin, Ethereum, and the 2 stablecoins. So besides Bitcoin, Ethereum, and Tether and USDC, the ETFs are right behind them, and all that within 7 weeks. Think about that, community. That just shows you how much liquidity matters. Liquidity does matter. And because they are so liquid, this translates to the high trading volume. So this tells you that this trading volume will be higher and higher because they'll keep accumulating more and more Bitcoin. That means they'll be more and more liquid, and they'll be rivaling stable coins now. And keep in mind, this volume is not on-chain, is not on the blockchain. So these are opportunities that we as an industry are missing out. And why? Because ETFs are driving liquidity in the crypto space. They are the liquidity drivers, ETFs, because they accumulate liquidity. And we see how liquid they are right now at 59 billion. And this is why they have such high trading volume as well. They are only behind Bitcoin, Ethereum, and the 2 stablecoins. So right now they'll be on the 5th spot within 7 weeks alone. They're already in the top 5 listed. And by the end of the year, they'll probably be on the top. They'll be the most traded as far as a derivative like an ETF. They'll be the most traded by the end of the year, simply because of capital. This is what capital is all about. And capital and liquidity is the same thing. Keep in mind, the topic today is the role of capital in the crypto industry, and how, because we are not focusing on that, because the community, the industry still doesn't understand the impact that capital actually has on us, and how Wall Street can just walk in, create their own liquidity pools through ETFs, and drain all the liquidity that would come into the crypto space on the blockchains, and it's capturing it single-handedly through ETFs. And why are they doing that? It's not because they care about Bitcoin. It's not because they believe in the ethos of Bitcoin, of having the individuals be their own banks, have control over their own assets, no centralized entities in between, none of that. It's because of this, the high volume, and it's because of this as well. The question here, will BlackRock make money from a Bitcoin ETF? That's the question. And we haven't looked at this. So let's look at some numbers here just to highlight the reason why BlackRock and their comrades are into the ETFs. It's not because they enjoy the mythos or the core values of Bitcoin. No, it's because, let's look at it. BlackRock, they are champions in ETFs. They have over 393 ETFs in the US. And they had 2.3 trillion asset under management as of May 2023. And these are the numbers. So BlackRock's shares alone generated over 3.7 billion in revenues just in 1 month, just in May alone. So keep this in mind. These individuals, they're not in the crypto space. They're not trading Bitcoin just because they believe in fairness. They believe in the 99% to have equal opportunities and decentralization and self-custody and all that. That's not why they're in here. They're in here because of they're generating high billion-dollar revenues just in 1 month alone, 3.7 billion. Now, in the last 3 months, they had an inflow of 65 billion. And also just in May alone. So 3 months in a row, they had like an inflow of 65 billion. This number doesn't tell us much. So let's look at something here. Earlier today, it went down. Let's look at CoinMarketCap. Let's refresh. So you see Bitcoin's volume right now. Bitcoin's volume right now, based on CoinMarketCap, says it's 69 billion. Now, this is just within 24 hours. This is 24-hour trading volume is at 69 billion, right? We saw that BlackRock's ETFs, all 393 combined, had an inflow, basically a volume of 65 billion. So Bitcoin alone, within 24 hours, has a higher volume, as we see here, generated higher volume just in 24 hours, more than BlackRock had in an entire month. So what does that tell you? This shows you how lucrative these spot Bitcoin ETFs are for BlackRock and other asset managers. They're in it for the funds, for the money, for the revenue, of course. They're not in it for the benefit of the people. They're in it for themselves and their shareholders. And this is how they are intercepting all the liquidity, all the volume here, and all the liquidity. They are the ones accumulating it. They hold half of the liquidity compared to countries, public and private institutions. ETFs right now hold half of it, and in less than 2 months already. So by the end of the year, this number is going to probably, if not 10, like it's going to multiply by a lot. And this is why we need to pay attention as an industry, that they see that they only had an inflow of 65 billion in the month of May. Bitcoin does that number in a day as far as volume. This is a lot of potential for them. This brings in a lot of revenue for them. So imagine in 1 day alone, they make the same amount like they did in the month of May. And this was 3.7 billion. So imagine how much fees they're going to make with Bitcoin. Bitcoin is a cash cow for them. That's how they look at it. And we need to wake up to this and really understand what's going on here. And there's other things I really like to highlight here as well. Why is BlackRock investing in Bitcoin? These are old numbers, okay? So we update them. it's of course because it's the largest cryptocurrency, of course. It has 60,000 right now. We saw that it's at 62,000 almost coin price. It's at over $1 trillion in market cap, and it had over 69, almost 70 billion in trading volume just within 24 hours. Because these are numbers of June 23. But if we look at coin market cap, trading volume is 69 billion. Market cap is over 1 trillion. So, and these are numbers that generate a lot of revenue. And this is why they're here. And how did they capture all of this? Because of liquidity. They're extremely liquid. This is not market cap. This 59 billion is liquidity. ETFs have 59 billion in liquidity. Bitcoin has just 1 billion in liquidity. Community, this is the reason why we always stress on retention of liquidity. This is the reason why we always emphasize on the importance of it, because our industry has not awakened yet. Don't understand what Wall Street is actually doing. They're draining the liquidity from the blockchain. They're intercepting the liquidity from entering the blockchain. And we need, if we want the DeFi to survive and to thrive, we need to have or develop cryptocurrencies, ecosystems that retain that liquidity, because this is what Wall Street is doing since 7 weeks. They are busy accumulating liquidity while there's a lot of inefficiencies going on. How can Bitcoin have such a high volume of 60, almost 70 billion in volume, and it's not doing anything with it? At least the ETFs, they're generating billions of revenues for themselves and the shareholders. But none of this is coming to cryptocurrency on the blockchain. And this is what the message is that Bitcoin is missing out. Bitcoin, because its lack of liquidity, it's only after 15 years, it's sitting at $1 billion. And these individuals came in, and within 2 months, they're already sitting at 59 billion. They're busy accumulating liquidity, and liquidity gives them volume. Volume gives them revenue. Do you get where we're heading here? It's a positive feedback loop. The more liquidity they keep accumulating, the higher the volume is. The higher the volume is, the more revenue they generate. Do we see this pattern? This is what Wall Street is teaching the crypto industry. And people just don't get it, that when you retain liquidity, you get a chain reaction. First of all the traders will come to you because you have more volume, you have more liquidity. And traders, when they come in and start trading with your liquidity, they understand that it's obvious. This is not a surprise. Of course, you'll have massive trading volume. You have the deepest liquidity, more than in centralized exchanges. What do you expect? Of course, volume will come with liquidity, and it generates some volume. Okay, now that we understand that, let's do some math here. Let's understand how Bitcoin is really missing out on this. And if they would be utilizing sustainable tokenomics, this Bitcoin liquidity would not have to be going to ETFs. It would be staying right here on chain, on the blockchain, where it needs to be. And the real true purpose of the blockchain technology would be fulfilled, because people will be able to and willing to learn how to have self-custody, first of all. Secondly, true decentralization is key without having centralized institutions such as, like we see here, these ETF players here, such as BlackRock. We have ARK Invest, Fidelity. These are all centralized institutions that individuals go to in order to get Bitcoin because it's just easier, right? It's much more accessible to the broader audience, and they don't have the patience. They don't have the patience to learn, and this goes against all the having your self custody and being decentralized. All that ETF is kicking all of that out of the window, and we gave them access to that because the cryptocurrency is not in the liquidity business. Okay, we're into the hype business, into just everything that is irrelevant, but not into liquidity. And this is why ETFs are coming in and they're driving liquidity like we see here. And with that liquidity, of course, comes a lot of benefits such as volume and revenue. And this is attractive to the shareholders and investors. And of course, that's why more and more people are going and purchasing ETFs, because it's extremely lucrative, not just for the issuers, but of course for the shareholders and investors as well. So with that said, I would like us, before we do some math here, let's now zoom in. We'll close out with the math and just look at how Bitcoin is missing out based on the high trading volume. They're missing out on a lot of things. And before we zoom in, let's highlight the challenges that we just identified here, okay? The challenges, again, is very obvious. Liquidity, we see it here. Liquidity is the number one issue, and capital and liquidity go hand in hand. How important is capital? It provides a source of funding. You can borrow, lend. It drives the economic growth. It creates competitive advantage, and it supports the financial system. So, and the most important thing here, it's a crucial component to our modern world. That's how important capital is and liquidity is. And Wall Street understands that. That's why they're busy accumulating it. And we can see how it drives the economy. Look how much it drives the economy through volumes. And economy is driven by transactions. Transactions is volume. Transaction and volume go hand in hand. So what we read is what we're seeing in the real world. This is theory. This is theory. And this is fact right here. We see the trading and the revenue. Okay. Now the challenges are liquidity, like we said. Number one, we need liquidity. That's the number one issue. And then secondly, like we saw here, is in the real world, we see inflation, because a lot of people don't like this. And this is why a lot of people are coming to cryptocurrency, in particular, because all the fears about declining US dollar, this right here, the weakness of major cryptocurrencies, fiat currencies. And this is what we see here. You see what happens to fiat currencies. They lose purchasing power due to inflation. And this is the fear of these investors. Plus, many people are afraid of banks and stock markets because the recent events such as the Silicon Valley Bank collapse and the stock sell-off, okay? And also the debt ceiling, like we just said. This is exactly it. Debt ceiling keeps being risen, like we discussed, money being printed, and this brings inflation. You lose purchasing power. Oversupply in money causes inflation. And these are the fears that these individuals have. And this is why they're running towards Bitcoin, towards cryptocurrencies, because it's the most lucrative asset class. And at the same time, when you print money, the first place you want to go to is the crypto industry, the crypto market, because it's the most lucrative. We always say this, last bull cycle, 24 million individuals were able to quit their jobs for good. And that was just in North America alone, just in the US alone. And globally, that number is much, much higher. And that's because the crypto industry is extremely lucrative. The good news is that we are just at the early stages of the bull run, as obviously. However, we are already almost at the all-time high. If we look at Bitcoin right now, let's look at the chart. This was all-time high in the last bull run, right? 68, almost 69. And look at where we are right now. So we're almost there. Probably by the end of the week, we'll hit there. And this was the all-time high in the last bull run, in the middle of the peak of the bull run. And we're actually at the very beginning. We're actually down here. So we still have all of this. All of this is just still ahead of us. So this just shows you how massive this bull run is, how much liquidity is about to enter the space, and that the money printer is not even turned on yet. The interest cuts are not done yet. Bitcoin halving is not here yet. So like we always used to say, this bull run is will be the largest one, the most massive bull run cycle ever that we ever experienced. And this is why, community, this is important right here. This is very important, is that we learn from this. We need to drive in, retain liquidity. If we retain liquidity, we have liquidity. Liquidity, once we have it, we'll have volume. We'll have high volume. Once you have high volume, guess what? You generate distributions, a lot of it. And this goes to the community, should go right back to the community. And this is how it should be. And Wall Street is teaching us here. They're giving us a lesson of capital and the importance of liquidity. And this is what we've been preaching for over a year now, since we launched this project, this ecosystem. And these guys come in within 7 weeks and they already took over. Why did they take over? They just focused on liquidity. That's it. That's how simple it is. Focus on liquidity, everything else will come. Focus on liquidity. Once you have liquidity, volume is going to come. Once volume comes, distributions are kicked in. And then all you do is rinse and repeat. And they keep doing this. And it won't stop. Because the deeper the liquidity gets, the more volume they get, the more distributions they get, and it's just a cycle. It's a non-stop cycle. And this is what we've been preaching. When we zoom in now, same concept, same thing we've been talking about, that we have a platform that is decentralized community, that is utilizing exactly the same concept, is utilizing the same strategies that these large institutions, asset managers are implementing. And this is, we focus on, we have to retain liquidity and we have to fight inflation. Like we see here, none of us want any of this, okay? And what we need is liquidity, retain it. Because once we do that, volume comes. And once volume comes, what do we do with the volume? We burn it. We use the volume to burn more tokens, to accumulate distributions. Look at this. This is this right here. This goes to the community, right? And this is the same thing right here. We're using the volume because we have deep liquidity to generate USDC distributions that goes right back to the community. So this is the best way to really explain and highlight in real time. This is basic economics. Capital is key. Capital is very important. Without capital, we saw here, there's nothing you can do, because capital is what drives the economic growth. It creates competitive advantage and it supports the financial market system. And we've been schooled here. We are being schooled by Wall Street. And with us, I mean the entire crypto industry is being schooled right now. All you focus on is liquidity and everything else comes by itself. And we are really excited that this is what we've been doing from the very beginning. And if you look at what our aim here is, that BULLRUN is a utility-driven token, an ecosystem that specifically focuses on addressing 4 major challenges within the blockchain industry. And One of those is what? Liquidity. Liquidity. And this is exactly what makes ETFs so successful, because they're liquid. They're focusing on liquidity. We can't stress this enough. So, community, let's zoom in and let's look at some tokenomics here. Let's look at how we are addressing these key challenges we just discussed. We discussed that inflation is an issue. We saw it here. So we need to address the inflation, the oversupply, depreciation in purchasing power. We saw that liquidity is the driving force and is missing in the crypto space. And this is how Bitcoin got hijacked, literally, because ETFs are building a large pool, have almost 60 times the liquidity of Bitcoin in the real Bitcoin. How is that possible? How is the real deal has 60 times less liquidity than the artificial? Because they are not efficient. And we'll do some math to close out. But back to now, us. This is why we have such tokenomics community. We have a 6% on the buy and sell side, so that we can retain 3% on the buy and sell side. We can retain liquidity. We identified that capital is vital for growth, economic growth, for sustainability, for progression. Capital, which is liquidity, is the foundation. That's the groundwork that you need. That's the basis of everything. Once you have liquidity, volume comes. Massive volume comes automatically. So first steps is gain liquidity. Second step is get volume. Third step is accumulate distributions. Does this sound familiar? This is exactly what we have. Retain liquidity. Okay. And then second step, get the volume. Retain more liquidity with the volume. Burn more tokens. Remove them from the total supply. And then retain distributions. That goes right back to the community. This is what this is all about, community. And the way we do that is we do retain liquidity 3 different ways, not just through the obvious, the taxes, but as you know, we also have a staking platform, and the staking boosters are a source of unlimited revenue, of course. And if you only stake your BRL tokens, you receive only 70% of your USDC distributions, but you can stake a maximum of 5 boosters and maximize your USDC 100% of your USDC distributions. Of course, 100% of the revenue from here also goes towards retaining liquidity, goes towards the liquidity pool. And then finally, we also have put 10% aside of the total supply, and this goes towards staking. And this 10% is, of course, generating USDC distributions, which we're using to do the buybacks and restake. This does 2 things. The obvious one, it adds liquidity to the liquidity pool, and it also at the same time removes tokens from the circulating supply. So those are the 2 things that it does. And this is very important, because now we are tackling these 2 items at the same time. We're tackling inflation. So instead of being inflationary, we actually, as you see here, we started with 1 million in total supply. Now we're down to 972,000 tokens. So actually scarcity is coming in. And same thing is for our other community tokens right here. Survivor token, which is our dedicated to the queens out here, to the women in the crypto industry. It gives them the platform to feel right at home. And they have the same tokenomics here as well. 1% goes towards ban. The 100% of the total supply has been put in the liquidity pool, and it's locked for 100 years. The contract is locked for 100 years. The one or team tokens or pre-sale or whitelist, none of that. The contract has been renounced. So it's a fully community-driven token. And same thing goes, of course, with the killer whale, fully dedicated to the whales in the industry. And we have this beautiful new updated website that we just By the way, it looks very beautiful, very attractive, and same tokenomics here as well. Just like we discussed with Killer Whale, we see here is the same concept, that 1% tax go towards the BULLRun wallet. The contract is renounced, liquidity is locked for 100 years, and there were no team tokens, there were no pre-sale whitelist, none of that. So these are projects that are constantly deflationary at least, and retaining liquidity, because that's the core, like we just looked at it. And another thing is that we are fighting inflation through banning supply, of course, and with BRL it's actually scarce. We started with 1 million tokens, now we're down to 972. And if we look at staking now, you realize that our largest #1 wallet is a staking contract. This is a contract that holds over 58% of the total supply. This is major, because if you combine locking away 58% of the total supply, and you combine that with banning tokens also from the total supply, and then you add, like we said, the 10% that we put away, and that will be accumulating USDC for buybacks and restakes. So you have 3 different ways that causes a supply shock. And this has a positive impact, of course, as well. So, but the bottom line here is liquidity is key. This is why we accumulate liquidity. And with liquidity comes volume. And because volume is directly tied to more liquidity, to accumulate more liquidity, to burn more tokens that become even scarcer, and to accumulate distributions for the community. We see the same game plan right here. All they want to do through these ETFs is to drive liquidity. What do they do? Their game plan is accumulate liquidity. Once you've done that, you have massive trading volume. Once you have massive trading volume, you can now generate distributions that the community can benefit from. So this is what it's all about, community. And this is the same concept. Accumulate liquidity, generate volume, retain even more liquidity, become scarcer, and give out distributions to the community. This is the game plan, community, and it's been very successful for the ETF issuers, and this is why ETFs are so successful. This is the reason why BlackRock and Co. are in this business. It's because it's extremely lucrative for them and their shareholders, and they're actually intercepting the liquidity that was supposed to enter the crypto space on the blockchain and then get into DeFi. So this gives us a leg up, community. This gives us an advantage. We are the only ecosystem that is strictly focusing on retaining liquidity. Now with this session, I hope you really understand the power of capital. Capital and liquidity go hand in hand. So the game plan of BlackRock and the other issuers is clear. Their goal is to retain liquidity. With liquidity, they'll gain the volume. With the volume, they'll gain the distributions. And they just keep recycling that over and over again. And once they're done with Bitcoin, Ethereum will be next, Solana will be next, maybe Binance will be next, and so on and so forth. And this is why, if we play our cards right and we really inform and educate the industry about the importance of retaining liquidity, everything else will fall in place. So we have a platform that is using the same blueprint that Wall Street is using to hijack Bitcoin within 7 weeks. And the game plan is working perfectly. Just yesterday, they hit a new record of trading volume because their liquidity gets deeper and deeper. This volume will be broken again next week, and then the week after, and then a month from today. It will keep getting broken because the deeper your liquidity is, it's just natural that your volume is going to keep increasing, because it will attract more institutions, it will attract more traders. And this is exactly the reason why we focus heavily on liquidity. It's the baseline, it's the foundation. Like we just saw here, capital is key for many different things. So those DeFi platforms that are focusing on retaining liquidity have a leg up, have an advantage. If you're in DeFi, especially for staking platforms like we are, and you're not deflationary at least, or scarce, and you're not retaining liquidity, and you're not using the volume efficiently to accumulate distributions for the community, then we are really not utilizing the blockchain technology to its fullest potential. And community, this is exactly what sets us apart. We've identified the challenges in the crypto industry. We've turned these challenges into opportunities. We've customized and developed a platform that addresses the major challenges, which is inflation, as we see here. We turned a debt-driven monetary system into a capital-driven or liquidity-driven mechanism, ecosystem. Instead of inflation, we opted for deflation or even scarcity, like we showed you here. And another thing is that instead of giving the distributions to the shareholders and keeping it for yourselves, we're using the distributions to go towards the liquidity, to the community. So community, today was the message of today. The takeaway is that the blueprint that we have is the same blueprint that BlackRock has been using efficiently and has taken over Bitcoin in less than 2 months. They retained liquidity. They had massive volume. They get they generate distributions, and they rinse and repeat. The deeper the liquidity gets, the higher the volume. The higher the volume, the more distributions. Same here. The deeper the liquidity gets, the higher the volume. The more volume, the more deflationary or scarce it gets, and the more distributions are out here for the community. Same blueprint. Same blueprint. This is very important, community, today. The power of capital is very important, and to understand how the game is played in the industry. And we've been schooled by Wall Street. They are executing their plan efficiently, and it's time to wake up the industry and to understand the power and the importance of retaining liquidity. And this is what sets us apart, because we are the platform, actually a staking platform, that uses 3 different mechanisms to retain liquidity, that is scarce, and that retains distributions for its holders. This causes a positive feedback loop, like we see here. By retaining liquidity, you get the volume. By volume, you get the distributions. Same game plan, same concept. And this is a win-win for both the holders, both the traders and the stakers. It's a win-win for both of them. The traders benefit because the stakers are busy accumulating USDC, and the stakers are benefiting because the traders keep generating more volume, and this is due to the retention of liquidity. That's the message for today, community. And that was the best way we could really build parallels and show you how these ETF issuers are retaining liquidity and then generating high volume and then generating high distributions and keep rinse and repeating. This is the cycle of capital, and this is the cycle of liquidity. And we choose liquidity over debt and inflation. So instead of debt and inflation, we choose scarcity and liquidity. and then we give back to the community through the distributions that are driven by volume, and volume come by accumulating liquidity. That's how the full cycle goes through. So this is it for today, community, and I hope you were able to take away something from today, and that it sunk in, and you really get the bigger picture of how this game is played, and how we set ourselves apart by setting us up for success, like we saw here. We're almost at all-time high. All-time high was 3 trillion. We're at 2.3 trillion now. So we're almost at all-time high of last bull run already, and we're just starting. So we always used to tell you that there'll be so much liquidity that is about to enter this space, and this is where we'll really shine, because we are built for that. We are literally built for the bull run. We'll be retaining all of that liquidity because we understand that with liquidity comes volume, with volume comes distributions, and this cycle keeps repeating. And this is exactly the same concept that we have. Retain liquidity for volume. Once volume comes in, retain more liquidity, and then become scarcer and give out distributions to the community. Rinse and repeat. And you have yourself permanent liquidity or capital mechanism that the whole community will benefit from. And that's the whole purpose. That's the whole idea. The blockchain technology was here for everybody to be taken advantage of and to benefit everyone, not just the 1% or the 10%, but the 90% or the 99%. We all should be taken advantage of. But if your ecosystem is not using this blockchain technology to its fullest capacity, you'll miss out on so many things. And this is exactly what sets us apart. And this is why we lay emphasis on education, community. This is why we do these sessions 3 times a week. This is why we do daily Zooms as well, to inform you, educate, inspire you, and just bring awareness of what the industry is going through right now. Like, for example, today's session was basically to just highlight the importance of capital and liquidity, and how BlackRock and their comrades are executing on that blueprint. Retain it, liquidity with liquid. After that, you get volume. After volume, you get revenues, or you get distributions, and then that goes right back to the community, and then you rinse and repeat. So it's a vicious positive loop. It's a cycle that won't stop, because it's a win-win for everyone. And once that wheel starts turning, it will be almost impossible to stop it, because one thing moves the other, and it just keeps moving, triggering each other in a positive way, and it will reach a point where you can't stop it. It just keeps rolling, it just keeps going. And that's the aim, and that's exactly the goal and the blueprint that we want to execute on, and that will be taking full advantage of this upcoming bull run, because the liquidity that is about to enter this market will be unparalleled. As we saw here, it's as clear as day. We're already almost at all-time high of last bull run, and we are just starting. So the liquidity we had last time, it will be more massive than last time. So once the money printer gets turned on, that we are all aware of, that is about to be, all that funds will come right into the crypto market. And this is where we'll be ready and waiting to retain all of that, and to burn all of that, and to give back to the community through that volume. All right, community, this is it for today. I hope you could take away something from today's session. And that's the whole idea. I hope you have a better picture now, and you have a satellite view of everything, how the challenges are, how ETFs work, how BlackRock and the comrades are actually executing the blueprint, and that this blueprint works. It works like a charm. And the sooner we as an ecosystem, we as an industry understand how important this is, and we're being schooled by ETFs, issuers, and they make it work, we need to really understand the importance of this, and this is what sets us apart. So with that said, community, I would like us to come back. I would like to come back to you. Bear with me as I'm sharing the screen. I'd like to come back to you, check on your comments, and let's kickstart our day 45 with the tweets. Let's ensure that we put the word out, community. Let's ensure that we bring awareness to our ecosystem. We have something very unique, and we do things differently than others in the industry. And our focus is long-term capital building, long-term liquidity building, because liquidity is what will push us forward. Liquidity is what will take us to the next level where we really need to get. So community, as we are going through the comments, through your feedbacks, through your questions, let's prepare to retweet. Let's prepare to be engaged. Let's prepare to bring awareness out there. That's the least we can do. We have something very beautiful, something very unique in this industry. And this is what sets us apart. And today, we really just wanted to focus on the power of capital. That's the topic today. Of course, we go above and beyond that. Our other 4 pillars, we have 4 pillars. One of them is liquidity, which is an umbrella of sustainability. Of course, we have security, we have education, and we have social network as well. But we'll discuss those on another session. Today, we stay with liquidity. So with that said, community, let's prepare for the tweets. Let's get ready to engage. It's day 45. I want to congratulate every single one of you. 45 days, that's a long time. And it's encouraging that we all have been persistent, consistent, and putting the word out. And also tomorrow, March 1st, marks the first day of the campaign with Adam. And we'll go from there. Also, we'll do an AMA with him. We'll announce it next week. We'll let you know what day it is, and we'll do an AMA on his Twitter account. And also kickstart tomorrow with the campaign. And this is great for our community. It will bring a lot of exposure to us. So, and that combined with our 90-day challenge, it's paramount. It's very important. And this will take us to where we need to get. So today's session was the role of capital in the crypto industry. And I hope you have a better idea of what role capital plays. Capital and liquidity is the same thing. So if you see us talking about liquidity, stressing on liquidity, you understand why and how important it is. And that liquidity leads to volume. Volume leads to distributions, and distributions attract more holders. And the liquidity attracts more traders, and it's a win-win for everyone. And that's a vicious positive cycle. That's the blueprint, and that's the winning blueprint. And that's something that we have, and that sets us apart as an ecosystem, as a platform. So with that said, let me come back to you, community, today. And check with you what you have here as we are waiting for the tweets. And if the tweets go out, please inform us, let us know, so that we can all participate and stop and go and retweet and engage with them. Meanwhile, I'm going through the chats here, and let's go through your feedbacks. My brother Theo here says, family, be sure to hit that like button. Absolutely, let's engage with the video so that it reaches as many people as possible. That's the whole idea. Queen Grace says here, we are really grateful to our dev, Brother Steve. Thank you 1,000 times for what you do. We want to thank you as well. And since I'm here as well, I want to thank you very much, Queen Grace. It's an honor to have you in the community as well. Thank you for all your efforts that you put in. And that reminded me, let me show you here. I also want to let you know that we have did I refresh? Let's refresh. Yes, the staking platform works perfectly now. Of course, now you can type in the digits, how much you want to put in. You can easily do that by now. For staking and unstaking. And also we added the audit reports on here as well. Like we say, we have actually 3 different ones. We have the token. We have the token smart contract audit that is completed, that you can find here and read on it. It's very interesting. So it gives you also an idea to see how our smart contract is built, and take your time and go through it. So here you see the 3 different smart contracts, and this is for the staking NFT staking contract, and also the BULLRUN staking contract. So these are 2 contracts, 3 different contracts: the token contract, NFT contract, and staking contract. So, and you can read through it. It tells you in detail what it does, the functionalities, and same thing here. You can read about how the staking platform works, how the BULL tokens gives you USDC rewards up to 70%, and how you can purchase the NFTs that give you the 6%, etc., etc. And you can the 5. This is how the contract works. And then you see the results, the audit results here as well. So we added that now also on the website. And our staking platform, like I said, is also good now. Like, you hit max, or you can just type in the amount you want. For example, staking 20, or if you want to unstake, there's nothing staked right now, but you can do the same thing. So that's resolved as well, community. So this is what we wanted to show you actually. And that's the good thing that we wanted to show you, that we have the audits up here. You can take your time and look at them, read through them. And then also the staking platform, now you can key in the amounts that you want to stake or unstake. It's all in there as well right now. So I see that Killer Whale is out. So let's get busy with Killer Whale right now. What else is here? Now, Brother Franklin says, "Good day, BULLRUN family." Beautiful. Thank you, Queen Val. The Killer Whale is out. Let's jump on the tweet. And like I say, as we're tweeting, feel free to, if you have any follow-up questions or any feedbacks or anything that you want us to discuss as we are going through this retweet session. It's just amazing how time flies. I remember the first day we started, and here we are, day 45. It's just incredible. We are halfway there, community. This is just, it's just mind-boggling. It's beautiful to see how far we got as a community. and with so much effort, with so much consistency and persistency. This is great. And the next one is out as well now. We have the BULLRUN. The BULLRUN tweet is out. These are beautiful, beautiful tweets. The true bond future bonds tokens with every 1% buy and sell from the total supply. Scarcity in token supply causes hyperdeflation. This is key. We have a beautiful, yes, my brother. Keep in mind, Killer Whale is out and BULLRUN is out so far. So let's get busy. Let's engage with the community. Let's make sure that we close out this day 45 with style before we tackle day 46 tomorrow. 1st of March. March will be a very busy day for us. I mean, busy month for us. And we're looking forward to really make the best out of it, to bring awareness to ourselves. Meanwhile, Brother Demo says here, we already have 3 smart contracts and we can add more. This just shows how complex our ecosystem is. Absolutely, absolutely. This is the beauty of it. Like, you build something. As we grow, as we progress, we can keep adding more and making it just more complete. This is what an ecosystem is all about, is progressive and just growth, being able to scale. And to do all that, we really need capital. We need liquidity. We need those strong fundamentals that we just discussed today, because without those, we can't build anything on top of it. So it's very important to do things the right way from the very beginning. This way, we established a strong foundation, strong fundamentals, that anything else now we can just add on it, and we already have an established and a strong, scalable foundation. That's very important. And yes, as we see here, day 45, this is incredible. It's a huge accomplishment for us as a community to be consistently involved with this, consistently bringing awareness on a daily basis to our ecosystem, educating on a weekly basis, on a daily basis. So this shows commitment, and this is beautiful. This is something that we need, is consistency. And Survivor is out as well. Thank you, Queen Val. We have all 3 of them are out now. We have Killer Whale out, BULLRUN is out, and Survivor is out as well. This is beautiful. Let's ensure that we engage with them, community. These tweets have powerful messages. They're very engaging. So let's ensure that we engage with them. We put the word out at the early stages of, especially, is very important. And thanks, Queen Val. We are on, says Miss Margaret, Queen Margaret. And yes, thank you so much for posting them here, Queen Val. That's very helpful for all of us to know that they're out. As you see here, Killer Whale is out. Then we have BULLRUN is out. And then Survivor now is out as well. We have all 3 of them out right now. This is beautiful. With that said, community, I just want to wrap this up. I want to thank you, first of all, for showing up, being present, and being active, and being so consistent on a daily basis, weekly basis. This is all we need to do. We have something beautiful that is well thought through, that is addressing real challenges in the industry, that is customized, developed, by 3 different smart contracts that you can read up. You can read on the. We added that now on the website, and also we learned today the importance of capital and liquidity, and that those two are synonymous, and also the importance of liquidity, because where liquidity is, volume always finds itself as well. And this, I hope today was a. I hope there's something you could take away from today. I hope it was informational, educational, inspirational to you all, community. With that said, let's keep engaging with these tweets. Let's ensure that we all comment on them, like, retweet, and bring the word, put the word out there. We have something extremely beautiful. And like we saw, we are at the very beginning stages of this bull run. However, we are already almost at all-time high of last bull run. This is massive. This just sets the tone of how massive this will be. We've always talked about how massive it will be, but you yourself see how massive this is now. We still have a whole year ahead of us, but we're already almost hitting all-time high of last bull run already, which put 24 million people into retirement. So, and we're already almost there. And this month of March will probably surpass all-time high of last bull run already. So this is why let's go that extra mile. Let's go above and beyond. Let's put the word out there. We have nothing to hide from. We have something beautiful, something unique, something that the industry needs, a platform that aggregates, accumulates, retains liquidity with the purpose of attracting volume. And then with volume comes even more volume, more traders, more liquidity. And then, of course, we have to incentivize the community for securing the platform by staking the tokens and giving them USDC distributions. And this will cause a positive feedback loop for all of us. And this is very, very important. I see here, Queen Margaret says, King Steve, before you go, can one top up when they stake? Can they top up if they want to? Absolutely, absolutely. Even if you stake, you can still top up. Absolutely. And you can top up whenever you want. That has you staking your tokens will not restrict you from not being able to top up. Absolutely. Great question. Great question. My brother Glenn says, this is our time. This is our bull run. You could not have said it better. This is exactly this is a great way to really summarize all of this. We've been all anticipating, working towards this time right now. And here we are. We are here now, community. And we have this great opportunity. We have a lot of liquidity and volume that is about to enter this space. We'll be flooded with it, especially after the interest rate cuts, the money supply being flooded into the market. This will be a beautiful bull run for all of us. And we couldn't be more happier than to share these moments with you, community, to go through this with you. Because if we were able to go through a bear market together, it's much more fun to go through a bull market together. So this is something we definitely look forward to. This is our time, and this is our bull run. Absolutely. Well said, my great brother Glenn. None other than Uncle George. Thank you so much for always being so consistent. It's always a pleasure having you in the community. Thank you for your support, your encouragement. It's very much appreciated. Thanks, Steve. Today's lesson, capital, meaning and use in trading and how it relates to our tokens. The future looks great as we're strategically placed to reap from the anticipated bull run. Very well said. This is beautiful. This is really a great way to really summarize it all. Absolutely. Capital is key. Capital and liquidity means the same thing. It's the same thing. We can't stress enough how important capital is, how liquidity is. And we saw it today in this session today, how the same blueprint Wall Street is using the same blueprint, easy blueprint, and it works like a charm. This is why they were able to put together 59 billion in liquidity in 7 weeks, and Bitcoin barely gets 1 billion in 15 years. That just shows you how inefficient this market still is, community. This market is very inefficient, and this is why these are the things that sets us apart as an ecosystem, as a community, is to close those gaps. And like I always like to make the examples with Apple, with the Microsoft, and with Google, it's not about being the innovator. You don't have to be the one that invented the technology, but you have to be the one that makes things more efficient. And this is why Apple is on top, Microsoft is on top, and Google is on top. You know, they didn't innovate it, they just make things more efficient. That's it. And this is what we're in the market to do, make things more efficient, because there's so much inefficiencies right now. And this is what we're here to do. Well said, Uncle George. And thank you so much for your feedback. These are great words. Absolutely. Absolutely. And Queen Val here, family, let us comment after the live stream has ended. Put our links or our hashtags. This is very, very important. Let's engage with this. As many of us, we are here, 20 of us. Let's all engage with this and enable this video to touch, this live stream to touch as many people as possible. With that said, community, I just want to thank you all for participating. You are all very much appreciated. We are on a mission here, and our mission is to accumulate as much liquidity as possible. That will attract more volume. Volume will attract even more liquidity, and it will make our token even scarcer. This in turn will generate USDC distributions for those who are holding and staking, and this will attract even more traders that will be happy to trade on our platform because the deep liquidity we have. And that's the type of strategy we are implementing. This is the blueprint that we're using, and I hope you got this message today. With that said, I want to wish you a wonderful, wonderful rest of your week. Looking forward to tomorrow, day 46. We surpassed the 45-day mark, which is halfway through. So congratulations to all of us for such an accomplishment. I've never been part of a 90-day challenge. This is the largest community challenge I've ever taken part of. And it was a big challenge, and we're halfway there already, community. So congratulations to all of you. Thank you for showing up in numbers. Thank you for your engagement, your feedbacks, your participation. You're all very much appreciated. With that, looking forward for tomorrow. Let's stay vigilant. Let's stay safe. I want to wish you and your families a wonderful time, wonderful rest of your week. Remain healthy, remain safe, and let's talk again tomorrow. Thank you once more for your participation, your engagement, your consistency. Let's get to where we need to get, community. This is our bull run. This is our cycle. This is our time. And we have everything going for us. We have the platform. We have the ecosystem. We have the tokenomics. We have the community. We have the educational sessions. We have the daily sessions. What else can we want? Everything works for us. We have everything in our hands right now. It's up to us. With that said, bye-bye, everyone. Looking forward to see you again tomorrow. We're looking forward for a very dynamic month of March, starting tomorrow with Adam, and we'll go from there. We'll set a date of where we'll do the AMA on Twitter, and then we'll let you know so that we can all attend and participate. With that said, have a wonderful rest of your day. Have a wonderful rest of your week. Looking forward to see you tomorrow. And till then, stay healthy, stay safe. Bye-bye, community.